Good morning, good morning, good morning.
Good morning.
Welcome everybody to go ahead.
Huh?
What?
I said on a bright sunny day. Good Lord.
It's very cheerful.
Yeah.
Well, we're in March. Happy March, everybody. I was walking the dogs today, 28 degrees, but it felt like spring was in the air. Yeah, it was good.
I don't believe it. It was so cold yesterday, my face froze. Happy Pulaski Day to all who celebrate. Everyone who's in the American Revolution or Polish, which in Chicago has a big crossover. Yes.
That's me, baby. Did you know that? Oh, yeah. Maiden name Rudnicki. I am Southside Chicago Polish, half. Yeah, don't tell the dames that. Yeah.
No. Poles have been part of our history.
Yeah, I know. So anyway, yes, we are big in Kosciuszko fans in my family, between Pulaski and Kosciuszko. Yes. And this holiday takes me by surprise every year. Even when I had children in school and they had the day off, it surprised me every year. So thank you for reminding me. You know what else today is?
Tell me.
Dr. Seuss's birthday today. A very important holiday to be noted for sure. Just letting you know. But everybody, we hope you have enjoyed the last month where you haven't seen us, or 3 weeks maybe it's been. It's been a long time.
Travels, holidays, travels.
Yeah. February is the month of love, and so we took it off. I don't know. It's actually the beginning of the spring real estate market, so we were very, very busy.
Yeah.
So today we're going to talk about statistics. Would you believe, Kyle, that I have February statistics ready to tee up for you today? Today's only March 2nd. Yes, I'm on it, girl. Yes, so I've got it. I apologize. I'm calling you girl. We were just talking about our ages before going on the air. Girl's not an appropriate thing to say. So, yes, my dear lady friend. Lizzie had Bridgerton on this week and whistled down. I don't know if you ever saw it, but whistled down the person who speaks in the background says, gentle reader.
Yes.
So, gentle viewer, welcome to our show. We're going to talk about Chicago real estate today, and we have a whole bunch of stuff packed in for you all today. So, buckle up. You have lots to learn. We're going to talk really about condominiums and what you need to know when you're moving into a condominium so that you don't get slapped across the face with something that causes a problem, right?
Yes.
Is that how you describe it? First of all, we're going to talk statistics. You know, I was saying to Kyle, on my social media, I see it everywhere. Inventory is the highest it's been nationally since 2013. We have more properties on the market. And you know what? They just don't know Chicago because if you hear that, don't listen. Right?
Chicago's different, everybody.
We are so different. Yeah. And February said it to us once again. We're going to talk first single family homes in the lakefront communities. 47 homes closed. Now, look at the graph. And I should say this. I don't say this very often. This is a 5-year graph monthly of the number of homes. And then it'll be the number of homes under contract and blah, blah, blah. But it's every month. So you can see the rise and fall of what a typical seasonal market is in Chicago. but you can see that the peaks go lower and lower every year, and the bottoms go lower and lower every year. And 47 is higher than last month, but it's still lower than this time last year.
And
you're
it's
going,
a story of inventory. So it was very interesting. Dennis Rodkin talked about, and the Chicago market is pulling back. There are fewer sales, et cetera. I'm like, wait. There's fewer properties on the market. This is a story right here of inventory, not a story of a market, a story of nothing to buy. Okay, I'm back.
Trust me, it's not, and I'm saying this from the statistical point of view as well as from an anecdotal point of view, because, my buyers are getting crushed in multiple offers, and some win, some don't win, because of their personal situations. They can't pay list and 20% over. They can't pay 20% over list price cash and waive their inspection. But, you're going to see too. Yes, you nailed it completely, Kyle. This market is not pulling back.
It's,
All right. Under contract, 55. So way higher than last month and the month before that, despite the lack of inventory. That's the key here. Because here I am. Let me get to the money shot slide. This is our inventory. Now look, in 2021, we had over 400 single family homes on the market.
Right.
Over 400. Today we have 104. We have 25% of the choices out there for our buyers. And yet we're still selling.
yeah,
So look at this. Only 104, but 55 went under contract last month.
Yeah.
Right? That's not pulling back.
no. And you and I talk about the day after Super Bowl, things come on the market. That's why we've got stuff on the market now. But it's not enough. Yeah, keep going.
Absolutely right. Absolutely right. It's not enough. 1.4 months of inventory is almost like zero. Remember, 5.5 to 6 months is a static market that's neither buyer nor seller. This is Nutsville. Now, we have not significantly gone up in the last 2 months in price, but still, if you look at $1,050,000, which was the median sales price in 2021, we're up almost 50% in 5 years. That's unheard of for Chicago, which just historically creeps. All right. And here, okay. So I play with this little bar chart every month when we get together. This time I thought, you know what? I'm going to do just 2 months year to date. So you can really see how we're struggling.
Yeah.
So for the first 2 months in 24, we sold 98 homes. For the first 2 months of 2025, we closed 111. So far this year, we've only closed 81, which is down 27% from year before. But again, folks, it's because there's no inventory. So, and you know what? It's kind of like, you know how the employment market, they'll say, some of the people have stepped back, so we can't even tell you exactly what unemployment is because they're not applying for unemployment. I kind of feel it's that way with the housing market. I think there are so many buyers who have given up because they can't compete in this multi-offer situation because the prices have gone up and affordability, for example, for a single family home in Lincoln Park is so high, right? That they can't afford to live where they want to live. I think we're seeing some people, even on the sidelines, the numbers would be even higher if they were able to get in the market. That's just my thought.
But if they can't buy anything.
Exactly.
You know, I get it.
Yeah. Here is the really astonishing part of the statistics. You ready for this? 516 closed. And again, you see how low that is compared to historical data.
Yeah.
818 are on the market. Look at that. 500 closed, 818 under contract. Now, it's only down 12% versus the previous year, which sounds like a lot, but not really given our lack of inventory, because look how low condo inventory is right now.
That's really low. That's scary low.
Yeah. Now, we were off 25% roughly with single family inventory versus 2021. We're down, it was over 5,000 in 2021. We're down to almost 20% of the number of homes available for purchase that there were in 2021. So the fact that, again, 1193, remember that number, 818 under contract.
No.
That's robust.
Yes.
So people, if they're flying, if your home is on the market and it hasn't sold, then it's not vanilla. There's something going on. You may be overpriced. It may be a challenging situation you're in and selling. But if you're priced right, you should be selling within 3 weeks, done.
Yeah.
Am I right or am I wrong?
No, you're totally right. You're totally right.
1.4 months inventory on condos, crazy town. And our prices are at $469.9. And again, we were under $420 before.
Oh my God.
Here are the numbers. Again, we're down 20% versus last year, but that was up 16% from the year before. And this is, again, only 2 months. So, we'll see how this shakes out over time.
It's inventory.
And of course, everybody wants to buy because we're seeing interest rates under 6% for the first time in years and years and years and years. So that's interesting.
I know.
Everybody, here's another tip for the day. If you bought your home 2.5 years ago, 3 years ago, 4 years ago, and your interest rate was 6.5 to 7.5, get back in there and refi, or consider doing a refi, because these rates are good now.
Do the math on whether it makes sense to refi now.
Yeah, I need my lender here to tell me. It's something like if there's a 0.5 point difference, then it's worth it to do a refinance. But everybody says we're not going to see a huge dip in rates. It's not like they're going to go to 5.5% tomorrow. This is a good number. All right, so just a couple of KCM slides to show you before we call it a day on statistics. Home price growth has moderated nationally. And this shows you, how much it increased year over year.
In Texas, that big.
The big bump up. Yeah, exactly. And now here's the big thing that they're saying with KCM. And this is an interesting point. They're claiming that wages and wage growth is outpacing home appreciation. So homes are becoming more and more affordable. Again, what we're seeing in Chicago is a little bit different than nationally, but it is good to keep in mind, A, if you're ever moving somewhere, B, if you're looking for a vacation home, C, if you're looking to invest, D, if you're trying to help your children figure out their lives. All right. And buyer demand. This is the interesting thing. They're saying mortgage rate change. They're putting it in blocks. So January to June 2020, rates went from 3.6 to 3.1. Here we go, what I was saying earlier. October of 2023, the middle bar, they went from 7.6 to 6.64. And September to November, 6.4. But, and then you see the demand go up. But again, demand doesn't much matter if you have nothing to buy, right?
Yeah, no. That's the effect of the surge in interest rates on buyer demand back a couple of years ago is incredible. Yeah. Well, that's such interesting news. And so people, Chicagoans, take this away. All the stuff you're reading in the Wall Street Journal, New York Times, whatever, the national papers about what's going on in the market is going on across the South, some of the mid-Atlantic states, all the way up to New York. But it is not affecting the Northeast, and it is not affecting the Midwest. We are robust. And one of the main, you hear us crabbing about the lack of inventory. The lack of inventory is, yes, people not moving out of their homes because they have such a nice low interest rate or have paid off their homes. And you boomers, I'm talking to you. But it's also that we are so, as we've talked about on this show, so chronically underbuilt. As of last summer, Illinois, and remember, Illinois is really Chicago, the Chicagoland area, as we like to call it, was underbuilt of homes by about 250,000 units. Okay.
I don't know where you got that, but that makes sense to me. Yeah.
I got it from, these are numbers that are across, I think they came from NAR. I mean, these are real National Association.
Yeah. No. I'm not doubting you. I'm just saying that sounds right to me.
That's a city. That's a fair size city in the United States.
Absolutely.
Alone is underbuilt by the size of a fair size city in Illinois. I mean, across the country. Just in Illinois, if we built it what we need to build, we would have a whole new city. So a whole new city just of homes. So let's just, first, we have a challenge, people, that is not just boomers get out of your houses, though that would help. But we have to build, we have to build, we have to build. So that's why we are bringing to you information about Foundry Park. It's a blip, but it's going to help. It's going to build like 3,000 homes, but that just got final approval from the Chicago City Council So it is going to start, even though there's still some hoops to be dealt with for infrastructure, they're going to start building this summer. Yes. We have to encourage building in the city of Chicago for Chicagoans and all the people who are coming here. People are still coming.
Right.
Anyway,
Yeah.
I got off.
Well said.
Okay, let's get into understanding. So people, they're buying condos or wanting to buy condos. And one of the least talked about, will you pop up understanding condo talks? One of the least talked about aspects of the condo buying process is your opportunity, the disclosure by the condo association and the seller of condominium documentation that you are supposed to review. And I think a lot of buyers think that it's not important to review it, or that their lawyer or real estate agent is going to review it for them. Now, neither the lawyer nor the real estate agent will review it for you. They may review it looking for red flags, but you need to review it for yourself. This purchase is you purchasing it. So you need to look at these. And we're going to go through what these documents are.
No, you can't say that strongly enough.
Yeah. The reason we're asking you to do this is these documents really guide your life inside the condominium association and your condo. And you need to know about it. You specifically need to know about it because it could be a very expensive proposition unless you've read them carefully. You may realize that you're living under rules you do not like and cannot abide. And you need to know that before you've purchased, or you're going to be really unhappy. And we don't want you unhappy. Our goal as real estate agents is to make you delighted where you go. So you're going to receive these things. And I'm going to tell you as a former lawyer, the bylaws and declarations make my eyes curve back in the back of my head, because they are the documents that were created back when they built the building or when they had created the association. And they are big time not interesting, but the bylaws have some stuff that you should look at. It talks about the number of officers, and it has some stuff about the governance of the entity that is the association, and you'll want to at least familiarize yourself with that. The rules and regulations you're going to want to spend a lot of time in, because those can be used by you and against you, and you want to know what the rules are.
Okay.
The budget is how they're going to spend the monthly assessment on people, on equipment, on whatever, and you want to understand what's going on in the operation of the building and just to know. And then there are other documents that you're going to get, which are like board minutes. There's a big time disclosure. It's called a Section 221, 22.1, but I call it 221. Disclosure, a reserve study, and a paid assessment letter. So those are some of the documents you're going to receive.
Okay. Should we talk about the timing of all this now, or do you want to talk about it later?
Talk about it.
Okay. So here's the deal, folks. They don't tell you that there's a money grab out there by your condo association management company. And so the process is this. When the seller goes to list their home, they have been given the documents when they bought the condo decks and all that, but there have been changes to the rules and regulations. Obviously, the budget changes every year. The reserve study may be out of date or whatever. They bought, say, 5-10 years ago. So the declarations are the same. Maybe there's a recorded amendment, but typically they're the same, but it's the other stuff that changes. So then we swoop in as the listing agents, and we're trying to market the property. And so we're trying to tell all the wonderful things about the property. And so you may or may not have those documents for us. But here's the dirty little secret. When your buyer walks in the door, the condo association will ask you anywhere from $450 to $1,200 for those documents. I'm seeing the going rate today at about $800. So you, the seller, are advised by your attorney, oh, don't pay that $800 until you're sure this buyer is good to go. little known in your contract is a stipulation that if you wait until after the attorney review, in other words, a week after you've negotiated your deal, to decide that everything's fine enough to order those documents, it's going to be another week or two before that buyer signs off and says, all the documents look good. I truly want to move forward with this deal. So in other words, Mr. Seller, from the date that you decide you're going to sell your contract to this particular buyer at this particular price, it could be 3 weeks before you know that that buyer has signed off and is totally good to go.
Yes.
I find, and you've paid $800 or more.
And technically, that contingency is not completed and waived, whatever, until they receive the paid assessment letter, which comes the day after the month begins of the closing. So let's say you're closing on the 5th of March, as some people are. The paid assessment letter is going to issue once they've received your March HOA payment, your assessment payment. Because I can't say you've paid the assessment until you have paid the assessment, because there's a credit at closing, etc. But so technically, the buyer can back out up until then. So they don't, but they could. So one of the things you want to do relatively early on, like as soon as you have a contract, is to get the association docs, and they will give you everything but the paid assessment letter. They take their time, but they do it pretty. Do it in the first few days, because you do want to know if this is not, and you can keep that information. However, the tricky thing is they can play games and sort of say, I know you've gotten this information before, but for you to order the paid assessment letter, that's $500. Everything else is almost free, but the paid assessment is for, which is tricky.
It is crazy. Now, and then you hope that they send the accurate documents. I had a deal once where they sent the wrong documents, and it looked like there was more money to be paid out and work to be done when it was actually the previous year's 22.1. That deal fell apart. Oh my gosh, there's so many. So the bottom line is, if you're a seller, make sure your agent, we do it, gets as much documentation right when you list the property as possible. That's rule number 1. Rule number 2, be aware that, well, just like even the financing is not a done deal till the day before either, right?
Well, so there are a lot of associations have intranets where you can get a lot of the documentation without going through HomeWise.
Exactly right. Yeah.
But the tricky
thing what you do.
is, if you don't get everything, they can claim fraud in the transaction if there's a document you somehow missed. The reason to rely on HomeWise is then it's the association's problem if they didn't provide a document, not your problem. So there's some trickiness. It's just tricky. Okay.
Yeah, I don't want to be Debbie Downer here, but this is, to Kyle's point, this is serious stuff. As a buyer, you need to read it all. As a seller, you need to understand the importance of being a part of your association, knowing what's going on, and providing in a timely manner. Okay, so I'm off my soapbox.
I'm gonna blast through these. The bylaws, read them, but just read them with your eyes as open as you can keep. Read them before you go to bed. But they're interesting. So this is written largely when you when the association was set up. The thing though that's sort of interesting is voting. It specifies the procedures for member voting. So there are some things that are hard to change because they've been baked into the bylaws, and there's often a high hurdle for amending the bylaws, and so it can be tricky to change certain things. Pet policy, rental policy. Give you just an example. The rules and regulations are what you care about. It has the pet policies, use of common areas, noise restrictions, fee schedules, etc. I have a listing at a building in Wilmette. Great building. It's a great listing. Someday I'll show you. That I didn't realize this. It's a no smoking building. Okay. And that is something you want to know. So that kind of stuff is in the rules and regulations. It will also have how much they're going to penalize you when you break the rules. And so you'll want to know that. So I'm going to switch. Yes, meeting minutes are important because you want to see what the board is talking about.
Absolutely.
You want to look at that. The reserve study is something you really want to know exists. And you want to know when it was last updated. The contents matter less than the existence. And here's why. You want to know if your association is paying attention to the entire physical plant of the building, and they've got a plan for dealing with it financially going forward into the future. Reserve studies look out 20, 30 years. They are paying attention to parts of the physical plant of the building that will age and require improvement or shoring up or complete rebuilds within that time frame. And you just want to make sure that the building is doing the things that are necessary, paying attention to the issues that are necessary. And a reserve study will tell you, okay, they're on it. If the reserve study is 30 years old or 20 years old, this is a building that's living in denial. You want a reserve study up there. The 22.1 disclosure will tell you whether it's a litigious building, whether people in the building have sued or whether they're being sued by contractors. You want to know that too. So that's contained in the 22.1. 22.1 also tells you the current level of reserves, capital reserves, and we'll get to that in a minute. So this is your financial responsibilities. Your HOA will include both an operating contribution and a capital reserve contribution, just so you know. So some places break it out so you understand how much it costs on a monthly basis to run the building, fund the budget, the annual budget, and what's being used to rebuild reserves after a project. So you look at that. Special assessments. Sometimes there are special assessments for big projects, and you can either pay it off in one or two big chunks. You can pay it monthly. Sometimes so you'll see that for special assessments. And then each year, at the end of the year, they will send. The board is required to send to all owners a draft budget and have a meeting before they pass the next year's budget. And that's just good to know. Okay. And what do you ask your people to take a look at when they're doing this? What kind of guidance do you give your buyers?
In terms of what to look at, I'm not sure what you're asking me. One of the the reserve study for sure, what you mentioned is a huge deal, whether or not there is one or not, where they are with it. Some of the things that aren't always, excuse me, the same from building to building are like windows, whose responsibility, and that's in the condo declarations, and it's not the same. In some buildings, they take care of it. If there's a problem, the association will pay to fix the crack or fix the seal. And in other buildings, you're going to have to pay out of pocket to replace it. So that's kind of a hidden one that people should know about. And as much as people shouldn't have to be experts, like when were the chillers replaced? If your air conditioning is included in your assessment, things like that. The other thing is these buildings that are newer, like built in the last 15 to 20 years, where there's like a 2-pipe system and you've got that mechanical, the fan and everything to bring the heat and the air out. Those things can be $3,500 each. And a lot of people don't realize that would be their responsibility when that goes out. So I would say just, and I see your note on here about renovation approval. Some buildings are really good about just letting you go in as long as you've got somebody who's got the right insurance. Others are sticklers. And your building's an interesting one. Now, I think it's really good, but when somebody puts down flooring, they have to put the soundproofing that's, you're supposed to have. And you'd be the first to say, thank goodness the people above you have the right soundproofing, correct? but it can be expensive, and that's something somebody should know if they're buying.
Yes, I agree completely. I think what you really want to ask is how. So one of the things that our building used to do and doesn't do anymore was be sort of temperamental. They would have renovation approval, but you never knew what you were, as a owner, who was deciding what, and maybe it was some board members' personal issue that they were trying to enforce, and so it made everything very difficult. Having renovation guidelines, construction guidelines set forth, that's what you want, is for you as a owner to know what's going to be asked of you so that you're not chasing a moving target. That yes, you have to comply with something you may not agree with, but at least you know what it is.
Right.
So what, and we're going to get to in our next deck, we're going to have to fly through this. Signs of a healthy organization.
Yeah, this is interesting. Let them watch.
Yeah. Okay.
Keep going. I like it.
So these documents are going to be your contract with the association going forward. During the buying process, it's all been your contract with the seller. The association documents are your contract with the association, and they're really going to guide your life going forward. So read them carefully. Your lawyer is not going to read them carefully. They've read 1,000 of these. They're not going to read them unless you say, I can't understand them. I'm going to pay you extra to do it. It's not included in the package of work unless they're charging you $5,000 for the transaction. So this is on you, because we won't know the issues that are of key importance to you. So you're going to want to read these carefully. Do not skip this step. Do not sort of assume that I was sure they were fine. Don't read them. Okay, next one. Because this is the signs of a healthy organization. Okay, financial stability, effective governance. And by effective governance, it's clarity, monthly meetings, open meetings, communications from the association manager to the owners, often intranet. That's the website for just the association where you can get all sorts of information. It is a community that talks to each other, so engaged community, very much in buildings that have that are mostly owner occupied, have a much more engaged community. You do want to see that they are not getting sued all the time, so legal compliance is huge. And again, just transparency. Okay.
Oh, I've got one for you. You ready for this?
Oh.
I just closed on a property last month. I had the buyer. The buyer decided to move forward. It was a 100-unit building in River North. And when we asked to see minutes for the last 24 months, do you know how many they were able to produce? 2. The previous property manager had not made them have board minutes, meetings, kept minutes. We were like, I've never in my 39-year career seen a building so poorly overseen by a property manager. And obviously they knew it because they kicked them out and brought somebody else in. But that's my can you believe it moment of this week.
And there are some buildings, there are a lot of people who are like, I want to live in a building that has $250 HOA assessments. And those tend to be 3-unit buildings or maybe 4-unit buildings. And they hold effectively annual meetings because they're that's the way they do it. There's a ton of risk associated with that. So I tell but they're often great places to live, and I understand it. But I tell my buyers, put away at least $1,000 a month for your HOA for the upcoming special assessment to deal with the roof, to deal with the work, to deal with the problems of the building, because there are only 3 or 4 of you who can pay for it. So pay yourself an assessment like you do in one of the bigger buildings. Put it away, don't look at it, hide it, because it's coming for you. You want to have the money. Anyway, So anyway,
Absolutely.
you want them to have meaningful cash reserves. What are meaningful cash reserves in your mind, Anne?
6 months worth of assessments for all the units in reserve.
Okay.
So if you've got, if you've got a 3-unit building, each of which is just say 200 and let's use round numbers, 300. So
Mhm.
900 a month for 3 units total times 6 months. They should have minimum $5,400 in there.
Okay, but that's not enough people. For
No, but you know what? To your point, if
Yeah.
absolutely, why should an owner spend $800 a month to make sure that there's enough in reserve for the owner 5 years from now to get a new roof without a special assessment? I mean, partly why you live in one of those 3-unit buildings is to just pay what you need to and pay it. It's like escrowing property taxes versus just paying the bill when it comes due, right?
It is, but then this is such an interesting debate. So the person who's buying the apartment, you're about to sell your condo in a 3-unit building, and
Right.
you have a 20-year-old roof, and you
Yeah.
haven't assessed for it, and you want the next person to come in, and the next person sees you've got a 20-year-old roof, and there's no I'm going to have to pay for that new roof. Do I want to, or they're going to knock the money off the price? So you're going to pay
Right.
for it one way or another. So
Well, that's true. There are plenty of buyers out there who are not being schooled by their agents as
Yeah.
to risk. It's
Well-
really important these days to have a buyer broker who really educates you.
And there's also, as we've been talking about, there is such a seller's market right now that people are saying, I'll take it. I'll take the
Yeah.
and have to buy a new roof. But yeah, so anyway, I totally agree with Anne about what she's saying about a small association, that you're paying as you go, so you're not paying for somebody else's future. But at the same time, you never know when that future is going to come home to roost, and you're going to have to come
Absolutely. Yeah.
Consistent contributions, that there is, everyone has to pay by the month, and if not, they get sued. So you do pay by the month. That the savings are for predictable repairs. Again, the reserve study is very important for that. And ability to manage big projects without necessarily, unless the association is designed this way, to have to borrow or commit a special assessment. So,
Right.
or impose a special assessment. A lot of buildings choose to do big projects by special assessment to avoid having high monthly assessments. And I get it, but we agents have to know what those buildings are and prepare our people for that. So if you've got a building that has really low capital reserves and a high assessment, you have to say to yourself, is this a healthy building? Because
But you know what, Kyle, you bring up a really great point, because here's the deal. A lot of people do want those lower assessments, but yet these buyers think, I mean, they want their cake and eat it too. They want to buy into a building that has low assessments, and they want reassurance when they're in that buying process that, oh, this building hasn't had special assessments in the past, has it? It's not going to have any special assessments in the future, is it? But yet they want a small assessment, and it's like, sometimes the special assessment is okay,
absolutely.
right?
And yeah,
Don't just think a special assessment is the kiss of death. It means it's a terrible building.
Well,
Get that out of your head.
well, get it out of your head. But I think it's been planted by people talking about it and saying, God, my building has a special assessment and I didn't know about it. So it's gotten this bugaboo,
Good point, yeah.
rather than saying, this is why. And sort of talking, once you understand that this is how the association has chosen to manage itself, you can
Right.
say, I don't want to live like that because I'm not great at saving money.
Right.
Or I would find it, I would have to move. It would be hard for me to live like this. But that's your choice. And then choose a different building.
Exactly.
But the answer is to no. Okay. Components of healthy reserves, all of that. We've talked about this. So a realistic budget, you are not being expected to know whether it's a realistic budget. But if they've got a process where, one, they've had the budget meeting with the association and people attend it, and the association owners beat up the budget and have gone through it. You can say, well, this is probably a realistic budget. You can say that, but you also want to know that it's really broken out. It's quite transparent what they have in it. You also would like to see that they have an audit, an annual audit of the association finances. And if you get a clean audit, it's probably good. It's being well managed. So rely on processes, because who knows whether these numbers are realistic. But the processes of review before passage, and an audit, and monthly reports from the treasurer can let you have some level of comfort. So in the absence of expertise, look to process to make you feel comfortable. Do you agree?
Good point. Yeah, totally.
Okay, more budget stuff. Proactive maintenance. So buildings that are not sort of saying, if I don't see it, it's not happening, are the ones you want. So take a look at how the building looks like it takes care of itself, finding out what projects are going on. When you look at the building, does it look like it's in good shape? Those are kinds of things that will tell you if they're taking proactive maintenance. Okay, there's more up-to-date mechanical systems.
By the way, everybody, this is going to be on our YouTube channels. So if you want to go back and really reread all these details, they'll be there for you.
Yes. Okay. So this I thought was an interesting slide. Strong financial profile. Owner occupancy greater than 60%.
Yeah.
That is, I think so a lot of buildings have introduced rental restrictions that are 85% owner occupied or greater. There's some buildings that used to be great for investors, 260 East Chestnut, I'm talking to you, that are now no rentals allowed.
Right.
They're allowed to keep the ones that are in place, but none thereafter. So delinquency rate under 10%, you don't see the delinquency rate because the association has processes for fixing that. They can sue the owner who's not paying and get their unit and sell it.
You'll see it in the 22.1 if there's an issue, but you're right. I mean, it's not something they talk about a lot.
And loan eligibility, eligible for conventional loans. There are some buildings, and mine was this way for a long time, that were unwarrantable, which is not, it couldn't be conventional because it's history, the building at one point was before, in the 60s, was a long-term hotel, long-term stay hotel. And then it stopped and became a rental building after that. But it made that history of it once being a hotel made it unwarrantable. There are some buildings that have a lot of commercial space. 161 East Chicago Avenue has at least half the building, and it's not part of the association, but the fact that the building has commercial space, a lot of commercial space, has made it unwarrantable. Some buildings, though, are unwarrantable because there is significant, what's the word? Past due maintenance. What do you call it? Unfixed issues. They got a lot of
deferred maintenance. Deferred
maintenance. So that can be tricky. So those affect, but there are some great buildings that are not eligible for conventional loans.
Right.
Would you agree?
Yeah. This is a great slide. I like this.
Okay. Clean board minutes. So, and by clean, it's transparent. They're covering the issues. They're having the meetings on a regular basis. You're seeing that there's not emergency after emergency. It's they discuss robustly the issues that are facing the association. Those are clean minutes.
Well, the other thing, though, is I've seen board minutes where they are so sparse because they are so afraid to write down anything that they're discussing that they only include things that they vote on. So if you're looking at minutes that where there's basically nothing on there except we approved the 22.1, we approved the budget, whatever. I mean, that's not telling you really what's going on, which gets me to my big point, which is, you know what? If you don't get involved, you only have yourself to blame. Right? If you don't.
However, I'm going to push back. Yes, the minutes often are less robust of discussion and are really more on outcomes. But even the agenda tells you what's going on.
Right, right.
So,
but now some boards will have, for example, a decorating commission or a gardening commission where members who are not members of the board will actually be involved in helping to support what's going on in the building. And if you see that in the minutes, that gives you a great feeling that everybody's involved in moving the building forward. That's what I'm saying.
Agreed. And professional management is key, especially on communication, keeping the board on track, because boards are volunteers. They're people who live in the building. You really need a strong manager, and relationships with vendors. You want vendors who want to work in your building. You want competitive bids, because the more people want to work there, you're going to get the best price. If your building has poor vendor relationships,
that's a really great point, Kyle. Yeah.
And so this is, sorry that for 2 slides I technically say the same thing. Market stability. So you want to be seeing prices building in your building. The prices are growing, that there isn't fallback in values, because that'll tell you something's going wrong with the building. Now, that is not to say, as you see in some of these buildings, is that there'll be $1 million sale and then there'll be a $400,000 sale for the same unit or the same tier.
Yes.
Really, what that often reflects is the 400 is a gut estate sale, and the $1 million unit is the I've done everything to it. You have to do nothing, and I've improved it, and it's on a higher floor, and blah 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 blah. So allow your agent to help you understand what's going on. Why is there that variability?
Thank you for making that point. It's not different at all than a neighborhood where you have a rundown home that sells for cheap, and you've got the one that's been all done up. And there should be a price disparity between the two. So, very good point.
Now, rental policy. So some lenders don't like buildings that have a large population of renters, that large population of investor owners, because I think there's this view and that it won't be as well maintained. Investors care about low cost to them and their profit margins. I get it. Totally get it. You're an investor. You're trying to make money. I totally get it.
Yes, and all these buildings that are deconverting back to rental are because of the high investor ownership, where investors did not want to pay for the capital improvements required to maintain the building reasonably well. And so the buildings degenerated, went into awful states. And so it put them in a position where the values to resell were so low that somebody could come in and buy 60% of the units and can deconvert it to rentals again.
Agreed. And and people do want, some people will buy, like young people will buy a unit knowing that it can then be a income stream when they get a family and they move to the suburbs and move to a bigger house, whatever, they might decide to keep the unit and want it to be an income stream. So I get why you would want some rental opportunity in a condo building.
Right.
So there is that balance, and it's getting to the reasonable cap that takes into account the needs of both the association as a whole, for the health of the association as a whole, and for buyers. So,
I have seen over time that buildings that have either a no rental policy or an extremely strict rental policy actually decline in value with the units, because you don't have as big a buyer pool, because there are buyers out there who won't buy unless they know that they have an opportunity to rent it if they lose their job or whatever, right? Or they get moved. And so if you must sell, then your buyer pool declines and the value will decline.
some associations that are introducing rental restrictions will say, we put a cap, let's say 10% on the number of rentals. But if there is a financial need, like I'm
Right.
and I have to move home and I need to rent my place out, blah, 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 that they will waive your unit for that purpose. And that's lovely.
Yes.
So they're often strict, but they understand that life happens to people. Okay?
Right. Right.
Long-term leadership traits, visionary management. You do not want on your board people with an agenda. You want people who have, unless the agenda is, I am here for the long-term health of the building and to protect your investment in this home.
Right.
There are too many issues that come up that will require people to really sometimes think outside the box. And you don't want people who say, we're never going to have an increase in assessments over 2% a year. You have a year of incredible inflation. You gotta increase the assessments. You just have people who are ready to listen, ready to look at what is important to the building's health going forward. And you want people who work well with a group, who are able to listen to each other, and who are open to communicating even hard truths to the membership, to the ownership, because that's really what's going to make this a happy place to live.
Absolutely.
Bottom line, you want a strong condo, and they are out there. You want a strong condo association, and they're out there. And let your agent help you find them.
Great conversation. I love it.
Good.
So important topic, and really, you know what? We went long today, but I thought it was absolutely worth it, because these are all things that are important to buyers to understand, important for homeowners to understand. And condo living is fabulous. It comes with responsibilities, and you need to understand what you're getting into. So thank you, Kyle, for sharing that. Great stuff.
I'm glad we did it, because we keep alluding to this and we keep being frustrated by this when we're out in the working world. So I'm glad we got to talk about it. Thank you.
Everybody, thank you for watching. We have another couple of great topics, probably ones that won't take an hour next time we get together, but they will be equally as important to discuss. So, and if you have questions, please reach out to us. Please follow us on social media. If you have any questions about buying or selling in downtown Chicago, we're your gals. You know how to find us. Our information is below, and we look forward to seeing you next week.